So we want to project other items on this income statement, such as the interest income, interest expense, and other income and expenses. So the interest income is going to come from Amazon's cash savings in its bank account, and the interest expense is going to come from our supporting schedules. So when we are done with the cash flow statement, we will have Amazon's end of cash balance, which we're gonna be calculating the interest income generated from the cash balance in its bank account, and then the total non-operating income. We just fill that formula right. So for the other income and expenses, we can take this to be equal to the changes in marketable securities. So Amazon has investments in marketable securities such as treasury bills, so securities that mature within 1 year. So for treasury bills or commercial papers or bankers acceptance, these are the most common marketable securities. So we're gonna take that to be equal to the changes here in the balance sheet, the current period, and then we take out the prior period. We can feed that all the way to the end of the decade. But for the total non-operating income or expenses, we can also fill that formula right. Then for the income before taxes, we could also fill the formula right. And then for the provision for income taxes, it's gonna come from, so we go to the control panel and we set an assumption here for the 5-year average tax rate for Amazon. So it's gonna be, in this case, we're gonna set this to be 32.2%. Then we can write here underscore tax rate, and we can name this formula in our name manager here. So you can go to this cell, you can copy this, we go here and we paste it here. So we have that in place. So we can now switch to our financial statements, where we take the provision for income taxes is going to be equal to, we take the income before taxes generated in that period, we multiply that by underscore tax rate. And we can fill that formula all the way right. Make sure that we are switching the sign since we want it to be a negative. So we have that in place now. So we don't have any equity method investment activity in tax, such as taxes on capital gains or dividends. So we don't have those assumption for Amazon, since it's a high growth company, and at this point in time they're generating a lot cash flow from operations to finance the operations. So they are not raising any capital from issuing stocks or bonds. So in this case, we don't have any idea of Amazon raising capital for any financing of its operating activities. So we can fill all of these to the right for the net income generated in that period. So we have that in place. Now we have been able to set up the basics for the income statement for Amazon. Now we can move forward to the balance sheet. So for the balance sheet line items, we'll begin with the current assets. In this case, we have cash and cash equivalents, restricted cash, marketable securities, inventory, and accounts receivable. So we're going to be projecting all of these current assets into the future. So we'll begin with the cash and cash equivalents. This is going to come from when we are done with the cash flow statement. So the cash and cash, the end of period cash and cash equivalents is going to come from here. However, we have the cash and cash equivalents must be offset by the restricted cash and cash equivalents so that we are not double counting. So in this case, the restricted cash and cash is gonna come from our supporting schedules. So the cash and cash equivalents, the restricted cash and cash equivalents from the supporting schedules, we can set this to be equal to the prior period. So we know that it's going to remain flat. So we can fill this all the way to the end of the decade. We have that in place now. We can also fill the total cash and cash equivalents right to the end of the decade. And then